You've come in for fairly heavy criticism from none other than the PMEAC chairman, Dr. Rangarajan, who said that had you taken more aggressive monetary policy steps rather than taking baby steps, we wouldn't have seen inflation at the levels they are at right now. Now, with the benefit of hindsight, looking back, do you believe aggressive steps may have been a far better option?
First of all, I want to say that I have enormous respect for Dr. Rangarajan. He is by far the foremost expert on monetary policy in the country. But I do want to say, in support of our approach, the following things. If you throw back to late 2009 and early 2010, when we initiated the reversal of the expansionary monetary policy, first you had the domestic situation. Yes, we recovered sooner than other countries, but our recovery was fragile because of the external uncertainty. Okay? The outside world was still unstable and uncertain. We had to factor that in. Second, if you look at inflation, inflation at that time was emanating mainly from supply shocks, especially food. Therefore, the emphasis of monetary policy was to manage expectations. There were no demand-side pressures. And third, you have to recognize that during the crisis, we'd taken policy rates to historically low levels. And we had to raise them up only gradually. You could not have done it abruptly because that would have been non-disruptive. So even with the benefit of hindsight, I would say that the baby step approach, as everyone calls it now, that we had adopted for much of 2010 and early 2011 was appropriate given the circumstances.
So now you've said that the impact of tightening monetary policy has been diluted by the expansionary fiscal position, which has had a suboptimal outcome. Now, how worried are you about the government not likely to meet its fiscal deficit target?
Well, that certainly is a concern, especially from inflation management point of view, because we've been running, we've been running a tight monetary policy and tightening it gradually. On the other hand, fiscal deficit has been expansionary. That's added to demand. So it has, to some extent, diluted the effectiveness of monetary tightening. It is important for inflation management that there is credible and sustainable fiscal adjustment. So that certainly is a big variable in our calculation. I also want to say that the government is deeply sensitive to making fiscal adjustment that is credible and sustainable.
And on a similar note, on the current account deficit, would you say you're worried in the current environment as far as the current account deficit goes?
I wouldn't say I'm worried. Certainly the current account deficit this year would be slightly higher than it was last year, but it will not be way out of line. We need some foreign savings. We need to run a current account deficit. What is of concern is really not so much the size of the not size of the current account deficit, but how we are financing it. On that account, there has been a turnaround in the sense that last year, much of the flows that financed the current account deficit were portfolio flows, which by definition were less stable. This year, there's more of FDI. So that is, I would think, a positive sign on the external sector.
Well, Governor, we're seeing growth moderating right now, but over the next 6 to 9 months, when we see demand coming back, do you worry that industry will not be able to move fast enough to increase capacity in order to service that demand, and that in turn could drive inflation, and that inflation could once again become the overriding theme for us?
That's a good question, and my answer would be no and yes. No for this reason, no in the sense that it won't be a critical constraint. For this reason, that just as demand has moderated over the last few months, capacity utilization has also come down. So there is some slack capacity there which can easily catch up with growing demand. Second, you must also recognize that there is some capacity addition in the pipeline. So that will take care of any growing demand. But beyond that, it is important that there is reversal in investment and investment picks up in order for that to meet growing demand. So once we've exhausted the slack capacity, once the capacity in the pipeline has exhausted, we need rapid accretion to capacity, certainly. So at that point of time, there would be concerns about that adding to inflation. But we should reasonably expect that the supply response will come in that period of time.
Now, Governor, should we see things in OECD markets deteriorate further? Should we expect that a reversal in the rate cycle could happen much sooner than what everyone's expecting? Because everyone right now is working on the assumption that maybe by April, May, we will begin to see a rate reversal.
Well, there are actually two questions in that. As far as the OECD countries are concerned, I would think that the situation today is less bad than it was 2 months ago, or indeed even 1 month ago. Over the last 2 months, we've seen some credible progress. The politics in Europe catching up with the economic situation. They had moved forward last Sunday, and there's going to be a meeting later today, and we hope and expect that there will be a credible solution to the European problem. Now, whether that will impact our monetary policy decisions, to the extent that it has any impact on our inflation dynamics, our growth dynamics, certainly it will go into our calculation. But to believe that itself will trigger a reversal in rate cycle, I think would be too premature. Because there are a number of considerations that go into reversing the interest rate cycle. Growth, inflation, not just the headline numbers, but what is driving them, what is the disaggregated situation regarding those headline numbers will all go into the calculation. So I think it's a bit too premature to just not talk about reversing the interest rate cycle.
There's a fair amount of expectation in the fixed income markets that the RBI will announce OMO purchases any day now. But while that move will soothe nerves in the bond markets, do you worry that a move such as that could actually send out conflicting signals at a time when you're trying to bring inflation under control?
Well, certainly. But first I want to say manage expectations about OMO. Of course, yields are going up because the government is borrowing more. And that itself will not be a signal for us to do any OMO. Our decision to do OMO will be determined by the liquidity situation. If we determine that the liquidity deficit is of an enduring character, then we will take some measures to infuse liquidity on a systemic basis, and there are a number of options for that. Okay. To the second part of it, can you remind me what the second part is?
So the second part is, do you believe it will send out conflicting signals when you're trying to bring inflation under control?
To the second part of the question, we've been through that before in late 2010, when we actually had to do OMO even as we were on a tightening interest rate cycle. So there is, as you say, conflict there, and that is both a policy dilemma as well as a communication dilemma. So if we actually need to do that, I believe we have experience to fall back on. So I take your point that it is a complex situation, and it is a complex decision to be on a monetary tightening stance and at the same time to be easing liquidity. But because of the past experience, I hope that we'll be able to manage it. But again, I want to say that is contingent on our actually deciding to infuse liquidity.
Now, just focusing on the regulatory side, you deregulated interest rates on savings bank deposits yesterday completely and with immediate effect. But why is it that you chose to take that step? Don't you believe that you ought to have given banks a little more time to transition to a full deregulation?
Well, that would have been one option. Another option people said was to do it in two phases. First phase to deregulate it with a floor, and in the second phase to remove the floor altogether. But in the event we decided that we should do it in one go, because all banks are in the same boat. They're going to compete, and we've given them enough time to reflect on the situation. It is not as if we sprung it all of a sudden. It's been in the policy domain for the last 1 year. So I would think that banks have had enough time to reflect on this, and they would adjust fairly smoothly and in as much of a time as they would like.
Now, of course, the adjustment that we saw yesterday wasn't smooth at all based on what we saw in the stock markets. But
we don't look at the stock market so much.
Right. But Governor, just moving away from that, and the issue about banks' capital requirements in order to meet Basel III guidelines. Now, we've heard various numbers being put out by a number of analysts, and one of the numbers that has commonly been thrown around is a number of 3.5 lakh crores that the banking system will require. Now, do you believe that public sector banks, which require the capital from the government in order to meet these capital requirements, are going to find it easy? Because on the one hand, we are talking about the government which is stretched for finances, and on the other hand, when it needs to finance these banks, it's going to, in some sense, have to borrow more.
Thank you for that question, and thank you for that perspective. First, I want to add to the perspective that you've given, that the capital requirements of banks is going to go up, first because of the need to conform to Basel III, and second also because the credit intensity of the economy will go up as we move forward. And that will happen because we will be shifting increasingly from services to manufacturing, which is more credit intensive. There's financial inclusion, which will add to credit demand. There's infrastructure investment that will add to credit demand. So per unit of GDP, the credit demand will be higher. Because of these two reasons, there will be greater demand for bank credit, and therefore greater pressure on banks to increase the capital. There is going to be pressure across the banking system, but the dimensions of the problem will be much higher for the public sector banks because the government is a big stakeholder, and the government will want to maintain its share at that level. So given the fiscal compulsions, the government will have to take a very difficult and complex decision. It's not easy finding this sort of resources. So they'll have to take a view about whether they can find the resources or whether they will compromise on reducing their stake in that. About the level of resources required, you mentioned some 3 lakh crore figure. I think it's, everybody has her own assessment. We have some numbers at a ballpark level. That order of estimate is correct. But the precise number will depend on the calibration that we do, both in terms of the rate and the period for accession to Basel III.
Sure. On another issue of customer service, there's a growing feeling among bank customers that the RBI is not looking out enough to protect their interests. Now, to just take an example on the issue of prepayment fees on home loans, we've seen the National Housing Bank move much faster than the Reserve Bank of India, where the RBI actually proposed this idea much before the NHB, but the NHB moved much faster in terms of issuing a regulation on that front. If you could just clarify that for us.
Oh, certainly NHB has been ahead of us. I want to compliment them for that reason. But as far as the RBI is concerned as a bank regulator, we talked about it to the banks. This was one of the important items discussed in the Ombudsman conference that we had when the IBA was present, some of the bank chairmen were present. And it was agreed that IBA will go back and deliberate on this, and they agreed that they will abide by this. One of the 10-point formula agreed at the end of the Ombudsman conference. Subsequently, I believe the IBA had raised some problems, and those will be discussed at a meeting with Deputy Governor Chakravarti later this month or early next month. And we hope that we'll see a decisive move in this regard in the next 1 month.
All right, Governor, thanks very much.
Thanks very much, George.
And I wish you a very happy Diwali.
Very happy Diwali to you and to all your viewers. Thank you very much.